Well, good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, the 27th of March, 2023, 6:40 p.m. Central Time. A little bit late. I tried doing this early. You ever have these clicker parts like I have? My batteries went out in two of them at the same time. One started taking over the other. It was the weirdest thing I ever saw. We couldn't figure it out. Replaced both batteries, problem fixed. Very strange, but I haven't replaced those batteries, I'll bet, in a year and a half. Wow. All right. That little bunny just keeps going. So we walk in today in the banking system a heck of a lot better. We've got SVB assets sold. Not all of them, but a number of them. We have the FDIC making some money from the looks of it. Part of the deal was if one of the stocks went up there where the company bought it, if it went into the money, some warrants, bingo, well, away it went. That's very good news. But there's still going to be about $20 billion in loss to the FDIC. But there's more assets to be sold, so we don't know where that's at. The important thing is we're not falling apart in the banking again at this point. We get hearings that go tomorrow in Congress as they are going to drill. Why did this happen? How do we prevent it? And I pray that our senators and our reps ask questions about commercial real estate. Could that be the next area? What happens? What gets this going? I can tell you the scenario. These banks look good until they don't look good because depositors start taking money out in mass. They get jitters about something that comes out somewhere. And that causes the bank to have to go and look at what it's got on its books to sell as the assets. As they do that, changes capital. They take losses on things they don't have to take if they run their whole course. And that's what you're going to hear. We get a lot of economic data start coming out tomorrow. So this is the end of the month. We'll get a good slew of economic data and see where it goes. And one thing, don't remember, we had a big up day on a Monday. Often that leads to Tuesday reversals. Keep it in the back of your mind. I don't want it to happen, but it's there. One last thing, and we'll go into the charts. I ask one thing of you as you keep coming back to this. Give me a thumbs up if you could. If you don't like it, I guess you're going to give me a thumbs down. But it helps us with the algorithms. We get more viewers. That really helps. All right. So if you look at the S&P, where's the battleground? It's right here at the 18-day average of closes. Now, the pattern has been lower highs, lower lows. And if we back this up just a little bit, and let's get over right here. Remember, this is a close-only chart. Up here, you were at 40.4975. So if you got up and closed over that number, that would break this pattern of lower highs, lower lows, but you haven't done it yet. So we have to see where this wants to go. Now, if it does it, it negates the downtrend, doesn't start an uptrend, but it would negate the downtrend that you've got. When you look at the price action here, we put on the swing line, you have a pattern of higher low, higher high. That's bullish. Where are you fighting? Right in the center of all these averages. So as we came off these lows into here, yes, you had that big spike up last week. Then you gave it back and you're fighting at these moving averages for direction. You get very bearish if the market takes out 39.37 as a chartist. And if you can close over 40.19, you keep the bull move going. If you stay like you are right here the past 2 days, you're not accomplishing anything. You're stuck in that resistance of those moving averages. If you can lift up and you clear the numbers here, maybe you can get to 4,100 area. We've heard that number so many times. If you clear 39.37, I'm looking for the 38.79 zone to come in. Where are we now? We're sort of no man's land, but a bullish bias. You're over the 18-day average and closed over it. The trend up. If you buy here at 39.88, where do you have to put a stop? And I was explaining that today to my morning people. When I want you to join us in the morning, I think you'd love what we do because it's not this type of show. Number one, I don't have to go this fast. I can really review the charts. And in them, I build them for you. And I go, why would I have you buy at 39.88? If you put a stop under the most recent low to break the pattern, you'd have to have it under 39.37. That's 51 points. At $50 a point, why do I want you to do that? It's too much money. Then I look at where you're at in momentum. Momentum's good. Momentum's pointing up. It's not overbought. Trend up. That's not bad. But the setup is such that if I have you buy in the zone, it's a $2,500 risk, and I refuse to do that. My normal risk factor on trades that aren't embedded are no higher than $600. I have tried that over and over. I have proven to myself that, and it's to me, that is the right amount, and that's the max. I break them down from low risk trades under 150, and there's plenty of those, to the medium risks on up. So I think you'll find joining us, you'll learn an awful lot of things. In the micro mini NASDAQ, it's hard to buy against the Bollinger Band, and why do you want to buy an overbought condition? I am not saying the trend isn't up. I'm saying the chart pattern isn't good. There's a very big difference between the two. In the Dow, you've rallied back to what I call that line in the sand, that 18-day average. It sits there by itself. You have a pattern of higher lows, higher highs. This is all bullish. If one were buying at 32,609, you'd have to have a stop down here. And we can look and see. That's going to be 2 days ago. Here you come. At 31,944. That's a 700-point risk. I think that's too much money to be risking in the market. So I'm waiting for the trends to stay up if that's what they want to do, but narrow in my risk factors by bringing in the swing lines to trades or give me embedded readings. Right now, in all fairness, trend up, bias up. If the pros are buying at 32.06, I've told you the stop's got to be under 31,943. In the micro Russell, you have a pattern of higher lows and higher highs. You have a market that is correcting, present tense, correcting an oversold condition, trying to lift up. It might, in the end, carry price to the 18-day average of close, where I expect a big resistance. If it gets through there, just like we had in the S&P, you've got a lot of moving averages above you. But this is the breather time. It's one of these. Whew. First time in a couple of weeks we don't go in and we don't come out of the weekend where we have a banking nightmare on our desk. That is good news. If everything's good there, what are they going to do with bonds and notes? They should break them. Why? Well, in different parts of the curve yield, the Fed is still saying they're going to fight inflation. I am not saying that you got to break the 30-year, but I'm certainly arguing it in a big way. The 2 and the 5-year are certainly going to be problematic. The 10's sort of a swing month, but you have lower highs, lower lows. So you're getting a correction in a market that has bullish bias. You're also overbought as can be. I think the pros came out up here, right here. I don't think they caught that last part, and I think it just broke from there. Now we get into the 5-year note, and I can see the argument now at the 108 area, and that's where the battleground's going to shape up on you. You're getting a confluence now of the 18 and the 18 and the 100-day average of closes. Big numbers, big important numbers. Overbought. What does overbought mean? The way I teach in my morning when you join me is I teach you that at that point, what you do is you're saying overbought doesn't attract new money. Embedded does. So when you get an embedded reading where both numbers are, for example, staying underneath 20 and they lock in like that, that attracts new selling money. If it were over, and I don't see one here that's over, it didn't get over. If it were over in doing that, it would attract new buying money. Overbought or oversold doesn't. And it's a filter I use to stay away from that market. Remember, there are chart patterns everywhere. Don't get married to T-bonds or the dollar or the yen or gold. Trade chart patterns, and that's what you're looking for. In the dollar, you're oversold. You're not embedding. So it's hard for me, and the trend is down, to tell my clients to get short there. But I could easily tell them in certain markets that have been bullish, and I'll tell you one that I've had them in is the British pound. That's got the embedded reading. It's got everything going for it. In the euro, this is a market that's correcting, present tense, an overbought condition. Both numbers have to be under 70 to be out of overbought. I don't think you attract new money with that. I'll wait. This is a market that's embedded. So you can imagine I've told my clients to be long. Now I'm looking for profit objectives right now. So that's the difference. You play it, you try to put it together. Does this all work? Nothing works all the time. That's why you have stop orders. That's why you have get me out of Dodge numbers. If you lose an embedded reading, I'm the first guy on the block to be gone. All right. But I'm also the guy that's going to stick with it when it's right, because you'll keep saying it's overbought. And I'm saying, nah, I'm not buying your argument. You don't understand momentum. In Bitcoin, you're getting a correction now in a market that performed fabulously through the banking issue. Now, are you going to lose the embedded reading? You haven't lost it yet. So this is a correction in a market that's got bullish bias and it's got a locked-in embedded reading. The pros are probably buying these breaks. They will bail if the red line closes under 79, in my opinion, and they'll come out at 30,469 if it gets up there, wherever the Bollinger Band is. I'm part of the position. They won't bail the whole position while it's embedded. I teach that in the embedded course, in the Bollinger Band course. Brent versus WTI oil. Just look at the break taking place here. This is a rally in a market that is a bearish market. Now, you'll say, Ira, what are you talking? When you're under the 18-day average, my bias is down. When it's over it, my bias is up, and it can flip like that. It serves you well. It's a filter on other parts. So as you've gotten the swing line to be bullish with momentum, because you're under the 18-day average, all it's saying is the market most likely is going to go to the 18-day average and fight a battle there for direction. In WTI crude, tell me it's not exactly doing that as we're talking to each other. It did it today and there. Coming up, Joe, you blew it. I can't be any clearer. America, don't forget. He came out. When was the elections? When did he say that we're going to buy the oil? Get your vote. We're going to do all this. This is what we're doing. And then when it comes time, do you hear one word? Is he back from Ottawa? I don't know. In the Rebob gasoline, higher lows, higher highs. Now, I told my traders I think it's game on again. It's overbought. This is not the spot to buy. It is the spot, though. Now you recognize, I think you've begun the pattern where the spring-summer demand is coming into the market now. I think that if you take out this break low here, I'd have to rethink that one more time. But until that occurs, I expect on breaks, when you work off the overbought condition, traders going to buy. And I told my traders my target now is 278. So I don't mind sharing all that with you. In the nat gas, this is that time of the year where parts of the country don't need a lot of natural gas for if it's air conditioning or for heat. And your injection, you're not burning things off, and that keeps it down. That'll change soon. We're going to leave April, going to leave March, get into April, get into warmer weather, and everything changes one more time. Plus, Europe's got to start buying a lot more to get through their next winter. Do you hear that key word? Next winter. Very important. So these are the things in the morning that you're hearing that I'm doing. I'm doing this today to give you ideas. I won't do this every time in these videos. These are the free ones. This is, you get what you pay for. You're paying me nothing. You're getting a taste of the apple. That's it. No more than a taste. The good stuff's in the morning. I want you to join us. It's like a membership group here. And one of the things I decided over the weekend, I'm going to start doing even more reports. They don't have to be special. I'm going to pick a market and just swing into it as a special report and do them much more frequently. They're all included in this. People that are not, and they go to the website to view those reports, they pay almost half the price of a monthly subscription to do it after they get a few free ones. So you got a lot to be gaining here. You'll see that I cover the weekly charts, the daily charts. You get 24 videos a month. It's an awful lot. IraEpstein.com under research, or you can click up here. It'll take you right there. For those of you with me, 5:15 in the morning, I'll start recording. You take care.